Hello, everyone. Thanks for bearing with me there. Sorry, I'm a few minutes late. Got stuck in some traffic on the way back. Um, you know, it is nuts what has happened in the bond market today. We'll get onto that later on. It's just kind of insane. We're also going to go through the CP rail strike because that has happened and the implications of the rail strike are going to be far and wide. It's going to affect both Canada and the US. And again, commodities, things that are already completely messed up because of the supply chain issue. It's almost like our governments are doing it on purpose. They're creating all this inflation. It's guaranteed that you're going to get strikes because when inflation is this high, when you look at the Weimar Republic and what really happened, um, we could see a similar thing. I think it's 50-50 because if everybody started striking, which they inevitably will, as inflation gets worse and worse and worse, if they then come out and try and print money to circumvent that and keep the economy stimulated, we'll be doing exactly the same thing as the Weimar Republic. So I've changed the chat to subscribers only. The reason was we kept getting those bots in the chat yesterday. There was some, I have no idea, some clothing line or something like that. So hopefully this is going to sort that out. So yeah, Monday, March 21st. And again, we're talking about bonds, which is just unbelievable. So let's go to the article from Yahoo Finance. It actually came through Reuters. Can Canada CP rail strike to add to commodity supply shock started by Ukraine war. I'm not too so sure it's been I mean, obviously, a lot of it hasn't. Let's face it, we haven't even seen the actual repercussions of the Ukraine war. It's too early to tell. The speculation on the Ukraine war on the commodities front is massive right now, but nobody really knows the implications yet. It's too early to tell. So it's definitely not caused by that, just caused by the cerveza sickness and the shutdowns. So a labor dispute that shut down operations at Canada Pacific Railway on Sunday is set to aggravate a shortage of commodities sparked by Russia's invasion of Ukraine, and a prolonged lockdown could hurt farmers ahead of the spring planting season. CP, Canada's number two railroad, halted operations after talks with workers' union failed, with both sides blaming each other for the outcome. It's almost like the politicians, isn't it? um, talks continued Sunday with federal mediators at the table. Oh, the good old government. They'll sort it out. If anybody's going to sort it out, it's the government. So, hello, Trent. Hello, Isabel. Thanks for keeping us informed. Love hearing your thoughts. Thank you for being here and listening to my boring voice. Bond yields skyrocketed today. Yeah, we're going to go through that. And that is, I mean, it's just some of the moves in the bond market have been crazy, 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 crazy. So, anyway, Canada, the largest country by area after Russia. Something about that depends heavily on rail to move commodities and manufacture goods to port, with 75% of all fertilizer in Canada moved by rail. The farm sector will feel the heat. Industry body Fertilizer Canada said the agricultural sector is already facing shortages and higher prices due to Western economic sanctions on Russia and Belarus, two major fertilizer producers. Remind me, who's the sanctions against again? Because it seems like we're suffering a lot as well as a result of these sanctions. So they're not only sanctioning Russia, they're sanctioning their own economy. And that's just really the fact of the matter. It's like George Gammon says all the time, Thomas Sowell's quote of trade-offs. There's only trade-offs. And the trade-off is we're facing the same sanctions, issues because of those sanctions. So the main issue is the short window to get farmers the fertilizer they need for their crops. We are 4 to 6 weeks away from seeding in Canada, and even sooner in the US. President and CEO Fertilizer Canada Karen Proud said. The impact of the strike could be felt south of the border as CP Rail's network runs as far south as Kansas City in the United States. And even though CP Rail's network doesn't run that far south, they'll be dumping parts of the train, and then it will be picked up by another part in the US. It's kind of like a what did they call it, where you're doing that sprint, oh, I forget, but anyway, where you pass the baton to each other. I forget. A relay. That's essentially what it is. But yeah, it's insane because you think of the drought, you think about all the other problems that farmers are facing. I spoke to a farmer 2 weeks ago, big ranch in southern Alberta, and she said like there's no water, like where the snow normally melts into these and creates these massive pools for all the animals to drink. Basically, that's their drinking water during the summer months. There's nothing in there. She said it was just like mud. So she's in a precarious place because she said if she has to buy feed in, that's going to cost a fortune because feed's gone up so much. So it's a bad crisis anyway without this happening. But again, you're just adding firewood to the fire, just keeping it going, and then chucking a bit of gasoline on there as well. Why not? Um, a CP a CP work stoppage will bring additional uncertainty to fertilizer markets in the US. Corey Rosenbush, the Fertilizer Institute president and CEO, said, adding the United States imports 86% of its potash from Canada, much of it by rail. There you go. Told you this is going to be far and wide reaching. This isn't just Canada, this is the US too. And you look at the drought maps in both countries, and we are going to be facing a food crisis at some point. And wheat, all these different things goes into so much of the products that are on the in the like the boxes, basically the longer shelf life products that you see in the stores. So it's going to be more shortages, higher prices, and this is like this vicious circle, because with inflation getting worse, you have more chance of strikes happening, and it just gets worse and worse and worse. And that's why, if it's not dealt with, which there really is no way of dealing with this. I mean, the government has created this again, this time through sanctions to Russia. Maybe they should have thought about that more before they did it. But again, it's all showboating. It's just literally grandstanding from these politicians. Trudeau is loving the limelight right now, coming out and saying, we're doing this for Ukraine, we're doing that for Ukraine. And I think, to be honest, Canadians should really realize that he's endangering all their lives, because Canada doesn't have the military to defend itself, and he is literally, um, you know, basically waving in front of Vladimir Putin's face. And whatever you say about Vladimir Putin, he holds a lot of military force under his control. Way more, he could wipe out Canada at the push of a button. And there you have our prime minister grandstanding and waving the Canada flag, Canada, Ukraine, like crazy. I think it's just insane, to be honest. And I heard that he may be held accountable for the actions in Ottawa, so that's good. But yeah, it's kind of insane, to be honest with you. But it says Nutrien, the world's biggest fertilizer producer, could weather a CP shutdown lasting a few days since it has moved potash from its Canadian mines to US stores ahead of spring planting, interim chief executive Ken Sates told Reuters. But a longer shutdown would force Nutrien to consider slowing potash production. There you go. So that would really screw up things even more, constricting the supply when there is still high demand. Nutrien plans to boost potash output by nearly 7% this year to around 15 million tons due to supply uncertainty. The lockout at CP is the latest blow to Canada's battered supply chain, which last year weathered floods in British Columbia that suspended access to Canada's biggest port. I don't think it really weathered those. I think we've seen those in inflation and the cost of everything going up. It's all been factored in, and really we've only been starting to see the repercussions of that over the past 6 months. And I don't know about you guys, but every time we go in the grocery store, there just seems to be less and less on the shelves. And where does this end? It's just kind of insane. But yeah, an 8-day strike at Canadian National Railway Co. in 2019 cost the fertilizer industry between 200 and 300 million dollars, the industry group estimates. The Mining Association of Canada said the work stoppages such as that of CP's bring extra operational costs to business, reduce confidence in Canada as a destination for investment, and for supply chain reliant businesses. Yeah, it's interesting. I think that really this is just damaging. Canada is such a damaged place, and to be honest, some of the moves are just bizarre. Like it's really strange, what we've got going on. But this happening it's just the beginning. I'm telling you, because there's going to be more civil unrest, there's going to be more strikes. And what's going to happen when it gets to rent strikes? Because that'll happen. It's already starting to happen in certain parts of California. So it's it's very, very interesting what's going on. But it's kind of insane as well. The Canadian dollar's gone on a heck of a rally over the past week. It's not been a straight up rally. It's been all over the place, up and down, up and down. But it's gone quite high against the Canadian dollar. I mean, just 2 weeks ago, it was like 70 cents on the dollar, and now it's 79.41. So it's gone up quite a bit, which is kind of surprising. But then again, if it's going to drop a lot, then you're going to have like a short covering rally essentially, which I think is what we've seen in the indices over the past 3 weeks, with a lot of FOMO of people buying back into the market, getting into those hype stocks again, saying, "Oh my God, I shouldn't have sold." But the thing is, I can't predict where the market's going to go. I did say though that I'd lined up a chart and I tweeted it out at Market Mania CA, if you want to follow me on Twitter, and see that chart. But it was essentially a chart of 2008 and a chart of 2022, and you could line it up bit by bit, and it was exactly the same pattern. And we saw a 3-week bounce of the indices moving upwards substantially in 2008 as well. And you just overlap the tape and it looks exactly the same. So is it going to be the same? Who knows? That time will tell. But I'm certainly short in the markets right now. But who knows how that's going to go? Could go good, could go bad. But it was worth the risk, in my opinion, with that overlap in a pattern. I just trade patterns at the end of the day. I don't really concern myself too much with news and everything like that, because it really isn't so much of a big deal as you would think it is. It really isn't. If you just trade the patterns, then the news kind of always seems to form into the patterns, if that makes any sense. So I just want to show you this as well. This is just quickly from about the Weimar Republic and the hyperinflation crisis in 1923. And I just wanted to basically show you some of this so we can kind of look at the history, look at the past, so we can kind of see what it's like going forward. So yeah, you've also got to be able to protect yourself, protect your money, protect your family, and protect your food. Yeah, that's very true. That's very true. Smart people have stacked food. Yeah, I was saying about food way back in September. All the time I was saying just get a little bit extra. You don't have to panic buy all at once. If you just had got like a couple extra every time you went to the grocery store of long life stuff over the past 6 months, you'd have a good amount stacked. And we got a good amount stacked. So I'm not too worried about that. But Germany was already suffering from high levels of inflation due to the effects of war and the increasing government debt. So replace war with cerveza sickness and government debt. I mean, that's exactly the same. But let's say the war, it wasn't a war, but it was a war against a particular sickness that we went on, which had the same sort of consequences of massive government budget deficits. And then passive resistance meant that whilst the workers were on strike, fewer industrial goods were being produced, which weakened the economy further still. So this is strikes, and you're seeing similarities with supply chain stuff that's going on in Canada right now. In order to pay the striking workers, the government simply printed more money. This flood of money led to hyperinflation as the more money was printed, the more prices rose. So yeah, that's essentially. But back then, obviously, it wasn't the same as today. They actually physically printed money. They don't do that anymore at all, unless they're actually monetizing the government debt, which is when they're buying Government of Canada bonds. That's not QE. That QE is something different with bank reserves. But when they're buying Government of Canada bonds, they're essentially printing money. It's not real money that they're printing, but it's new money that enters the system and the money supply, just like debt. So it's all debt at the end of the day, all money. But without further ado, we're going to turn it over to the bonds. I know you're all just dying to talk about bonds. It must be the hottest topic of the time. So this is the Government of Canada 5-year chart, and I just want to show you this because it is just insanity. So basically, the bonds are ripping to the high side right now. We got above this shoulder, leg, whatever you want to call it, last week. And we kind of stagnated against it, but it was holding fine. It barely even pulled back. And now it's just catapulted higher. Bonds, I think, let's have a look and see what the percentages were. For some reason, when I look at Market Watch, it doesn't tell me the percentages. So the 2-year Canada 2-year government bond, and we'll go through treasuries as well. Those were equally as high, up 8% today. It's crazy. Massive moves, 15 basis points. The 5-year up 15 basis points, 7.35%. 10-year up 6%, 13 basis points, so flattening of the yield curve. And the 30-year is barely up at all. It's only up 7 basis points, 2.94%. Okay, so the gilts in the UK, they call them gilts, not bonds. Everybody seems to have a different name: treasuries, bonds, gilts. So the gilt in the UK, the 1-year was up 5%, 5-year up 10%. 10-year up 9%, 30-year up 6%. Again, flattening out that yield curve, inverting that yield curve. But the US treasuries, they inverted. So the 1-year treasury was down 2.92%, 1.25%. The 2-year note was up 1.61%. The 5-year 0.89%, And oh, the treasuries pulled back. They pulled back a lot by the looks of it at the close. Because they were up a lot more than that, unless this is totally wrong. So the treasuries aren't up as much as they were, but the 5-year has overtook the 10-year. So the yield on a 5-year treasury is more than the yield on a 10-year treasury. So it's inverted, and the 30-year at 2.54%. I mean, it's just insane. The yield you're getting on a 5-year treasury for holding government debt for 5 years is higher than holding it for 10 years. So that just shows you the uncertainty in the economy and the fact that it's a big indicator, over 90%, that there's going to be a recession coming. So anyway, looking at this bond, I want to show you some history on this. So basically, this is 2018 where we had this peak, and then what you're seeing here where we're at right now, this is taking out all the 2013, 2014 highs. And then if we get above here, you're going all the way back to 2011. Now, think about, this is what I really want to think about, because this affects asset prices, even though people are still going to pile into variable rate mortgages. But what this means is the rate hikes that happen usually follow the bonds. They don't follow, it's not the bonds follow the rate hikes, apart from at the very short end, like the 1 year. So this could be used to forecast rates. So I mean, it puts up the chance of a 50 basis point hike by the Bank of Canada a lot. I still don't think they'll do it. I don't think they've got the guts to do 50 basis points, and that's April 1st. So literally 10 or so days away now, that meeting. I don't think they'll raise by 50 basis points, but the chances of them doing that are high, and they could. Who knows? But they've gone up substantially. So you can see, like, this bond is just exploding to the high side right now. So you're going up to touch these highs of 2.49%. So we're not far away from that. We're not far away from that at all. We're about 31 basis points away from there. And if you look at how much it's gone up, if you look at how much it's gone up just from a couple of weeks back, you can see that 30, 40 basis points is doing in less than a week. So who knows what's going to happen? And this could be a result of it pricing in inflation. But what this means is that people are selling Government of Canada debt. They don't want to hold it. So interesting what will be. Oh, I'm just looking at the Australia bonds because the market's open right now, I believe, in New Zealand, Australia. So bonds are up significantly. The 1 year in Australia is up over 10%. I'm not sure, did they raise interest rates today? David, you might know about that. Did Australia raise interest rates today? Because the 1 year is up nearly 12%, and the 3 years up nearly 9%, the 10-year up 5% in Australia. Bonds in New Zealand, the 5-year is up, it's up 4%, the 2-year up 4%. So they're pricing the 2-year bond in New Zealand is now at 2.78. Oh my gosh. How long do they fix mortgages for in New Zealand? Because that is just insane. Wow. Like 2.78% for the 2-year bond. That's gone parabolic from what I can see. Let's see if we can pull it up here. NZ02Y. We go. See what. Holy, look at this chart. And it doesn't go back that far, unfortunately, but look at this. This is absolute insanity. Um, the this is just like, look how fast this has ripped up. You've gone from literally negative on the bond to 2.8%. Wow, that is insane. And if we look at don't know. Is it 0501Y? Oh, that was lucky. That was lucky. I don't know the symbols. But yeah, so the Aussie 1 year is rocketing. Normally the we only get big moves in 1 years when they raise rates, but we had big moves in the shorter end of the curve last week. So here in Canada, and that's pushed up variable rates as well. So NZ mortgages, fixed mortgages for 5 years. Okay, so let's look at the 5 year because they've got. Is that not coming up on the screen? Oh, there we go. Oh, that's weird. It's not coming up on the screen, the comment. But anyway, let's go NZ05Y and look at this, see what this one's doing. So this is the New Zealand 5-year bond. Again, we've somehow missing loads of data, but basically you can see it's absolutely rocketing. That's at 3.125%, and they're at 1% now interest rates. So you can expect the 5-year fixed rate mortgage, it's going to be at 4% if they get to 1%, which is just going to be the highest it's been since 2011 in Canada. And think about the prices, they've probably gone up more than 100% in most areas since 2011. So you're just going to, the housing market, to say it is just doomed is an understatement. And that's if things don't change. That's if things don't change. And again, the rate of change and how fast this happens as well is also something to bear in mind because the real estate market does not react quick. So on Thursday we got revert to means coming on here, so that'll be awesome. And yeah, so it'll be really good for that. But I don't think I've really got anything else. It was just that, guys. Um, but yeah, thank you as usual for being here. Thank you for coming, and I will see you in the next live stream. Peace and love, guys. Smash that like button. See you later. Bye bye.